We've been speaking about our approach to dividend investing. Dividend investing across our income team at M&G, so not only in the pan-European and the UK strategies that I manage, but also in terms of the approach that Stuart Rhodes takes on the Global Income Fund. So our approach is differentiated because we focus very much on the companies that are able to grow their businesses sustainably through time because they have very strict capital discipline. So they only invest in best projects that for the future will deliver better earnings and in time dividends. So we look at dividend investing from a long-term perspective, and we very much look at the prospects for that dividend to grow from an attractive base today. And we don't think about dividend investing from the point of view of what can I get for my money today, but we think about it, what can we get for our money today, but also in the future, and how does that compound through time? We invest right across the European spectrum, across all countries in Europe. And that tends to be a fallout of where we see the best stock opportunities across Europe. What I would say in particular, which was one of the interesting recurring questions that we had today, was the outlook for recovery of Spain and Italy in particular. And although we see signs of a recovery coming through, we continue not to have much of an allocation to these markets. And it's not because we haven't done the work. I've spent 5 days in Spain and Italy so far this year seeing companies. But what I find anecdotally, which might be of interest, is that I can find companies in Italy that are doing a particular type of function, that are making a particular good or service that in some cases are trading at a significant premium to those that are doing very similar business in Germany and in the UK. They are all competing for the same customers and the same business. They compete against each other, yet there's quite a difference in the valuation. So I think my general observation is that there's a lot of hope baked into equity markets in Italy and in Spain, which I can understand because there are hopes for recovery and they're starting to see signs of recovery in those markets. But from a pure, strictly disciplined fashion, I can find better opportunities with very similar characteristics elsewhere in the European market. So we are and continue to be underweight Spain and Italy. The European fund, we all work on the same team. We all sit next to each other. We have a very common bedrock. The bread and butter of our philosophy is exactly the same. So we're looking for the same things right across different markets. So if you look at the overlap between the European fund and the Global Dividend Fund, there's approximately 16 or 17 stocks where we have the same names. We hold the same stocks. And you'd expect that because we are, first of all, we're operating as a team. We all want each other to do well. We're looking for the same things. So you'd expect that to be the case. However, we have 50 stocks in total approximately. So there's another 33 stocks or so that are not stocks that Stuart owns. And that's because we're looking to operate and create a balanced portfolio in a European stock market. So by definition, this is a fund in itself, which is designed to, over the long term, add significant alpha and income growth above the European market.